Welcome to Share Views with Stefania Barbaglia from Casabio Services and with our special knowledgeable guest, James Bevan from CCLA. How are you today, James?
I'm in magnificent form, and even better after that great introduction.
Well, it wasn't very good, but you're more knowledgeable than I am on many subjects.
I wish.
And the first of which, I just wanted to talk about the cybersecurity issues that we had over the weekend. Is this going to be a big story for the financial world?
Absolutely. And indeed, when one thinks about Lloyds Bank, that has been through a flurry of accolades of how well it has done since the global financial crisis, the naysayers have it that Lloyds has underinvested in long-term cybersecurity, and there will be a bill, perhaps 2 billion sterling, to bring it up to the mark.
But apparently our friends at WannaCry only managed to raise $51,000 from their ransomware, so it's not really a big issue, is it?
It's not such a big issue in terms of how much money they get away with, but it's a huge issue in terms of the disruption to business and the capacity for companies to retain the trust of customers and staff.
Right, well, speaking of trust and everything else like that, Lloyds Bank, a big fanfare in the press this week regarding the taxpayer being finally out of that situation. Apparently we made a profit of £500 million. But has that chapter been a happy one the last sort of 7-8 years?
I would say it has been a miserable chapter for British banking writ large. After all, the success of getting the money back out of Lloyds is only matched by the dire ongoing challenges of the shareholders' position with RBS. And then when one thinks about the extraordinary position that the British public now face, with Lloyds and HBOS as a combine having such a substantial share of British mortgage business, this is a really very difficult chapter indeed.
But we've got all these wonderful challenger banks coming in now. Doesn't that give us more choice?
There's plenty of choice, but what we might recognise is that choice tends to be exercised by people who are the most active and the most capable of finding their way around the world, particularly those who are online and engaged in the internet. Those, on the other hand, who are used to having to cope with conventional banking and branches will find that Lloyds is a very big player.
But one of those things is one of the sort of stories in the market is don't get mad, get even. If you don't like British Gas, you buy Centrica shares because if you feel they're ripping you off, then you as a shareholder you'll get your money back. With the banks as well, let's say that they're all they all have hefty margins. They are doing very well at the moment, apart from the ones with the legacy losses. Let's say, is Lloyds now a bargain now that the government is out? Is it now a bargain to invest in?
I would say that if you took a bullish view on the UK housing market, then Lloyds is a natural way to play that story. However, if you were to think about the global banking sector, I would say that the muscularity of a JP Morgan Chase or the relative long-term stability of a Swedbank are much more natural portfolio content than in terms of the big players in the world. The Asian banks have so much capital, they will win the deals in corporate finance.
So let's look maybe at the housing market. What is your views?
The housing market has been positioned in the UK with a chronic shortage of supply really since the 1930s. The last time that we had a very material shift in the planning laws was when Neville Chamberlain was Chancellor of the Exchequer. He removed planning controls, he permitted the introduction of building society loans, and we had a vast expansion of the housing stock in the UK so people could buy. Now we have house prices held up not by the real demand that people want individual houses, but simply by a relative absence of supply. If we're going to solve that problem, we need to see a thorough change in planning rules, but I, for one, do not anticipate that will happen anytime soon because it is a sure and certain vote loser.
But isn't it amazing, actually, that most of us have a roof over our head, given the way that the speculation on the housing market, especially in London and the South East, is mostly by people who are, they buy to forget. They buy a property off plan and they're empty.
Yeah.
Well, and the people who buy in London are actually not even English, and this raises a very interesting question as to how stable are the cash flows. And the biggest cash flows into the UK in recent years have, of course, been from China. And China has been rebalancing its investor book. And if the Chinese authorities, in dealing with the excess investment, credit and property investment in China leads to a reduction in global money supply and a reduction in credit flows, we may well find that the London housing market retreats quite rapidly.
Well, one of the issues with the housing market is that it's been propped up, obviously, by the near zero interest rates, and the Bank of England and Mark Carney clearly determined not to raise them, even if inflation goes up to 3, 4, 5%. I mean, there seems to be a policy there because we need those foreign cash flows into the country, don't we? To keep us afloat.
We do. It's a really interesting challenge, and we have 5-year money at 38 basis points. We have 30-year lending to the government at 1.7 percentage points. Now, let me put it on the table to you that if we were to see 30-year yields rise by 2% to 3.7, that would still be an extraordinarily low yield, but that would generate a 35% loss in the capital value of those bonds for investors in those assets.
But also at the same time, you have the problem of Brexit. So UK is relying a lot on foreign investment, and lots of people from other countries coming here. But at the same time, is quite complex, the Brexit situation. So
in a global context, what Britain has going for it in spades is an expectation that we will treat people well and that the rule of law is absolute. And I think that if you were in a large number of economies, you might wake up in the morning thinking, actually, I'd quite like to have a toehold somewhere else, because if the balloon goes up, I want to know that I will be safe and I will be respected. London does that.
And how much is, there used to be the case that the US and the UK, which are the rule of law places. Is Trump changing that at all? Is that making investors a bit more sort of wary of America?
Well, it's very interesting. If you look at the applications to undertake Master of Business Administration degrees, there has been a marked downdraft in people from Asia applying to study in the States, because they now believe that Mr. Trump will not permit them to stay and work after completion of their degrees. And that, therefore, is going to lead to a big shift in the attitudes towards people and how they want to operate globally and where they want to do business.
The change, obviously, in Europe has been, Macron there, so we've got this alliance back with France and Germany. Is Europe going to take over, even as compared to the UK?
Europe is doing a remarkable job in terms of improving consumer sentiment. I worry, however, that the banks remain a real problem. And we talk about British banks not being quite where we want them to be. We are exceptionally well off compared with a number of the European banks. And I broadly look at also the challenges of negative interest rate policy in Europe as a challenge for the European Central Bank. There has been this dependency on the Target 2 system, which is how the central banks lend to each other. In the States, the Federal Reserve zeroes balances between the constituent banks. In Europe, you get enormous imbalances, and they are embedded, and that is an accident waiting to happen.
Well, you're a fund manager. Put you on the spot. What's the best place or the best geography to invest in at the moment?
For me, I am still substantially investing in Asia Pacific. I see a positive tailwind in terms of improving economics. I see improving corporate governance. I see an appetite to make profits. So I'm looking at the areas where Asia does what Asia does best. So companies like Taiwan Semiconductor, Hon Hai Precision, companies that I believe will be very well placed for the decades ahead.
So if you look at the commodity space?
I worry about commodities on two fronts. When I look at base metals, I worry about the interrelationship between supply and demand, and I don't anticipate that we have enough economic vigor in the global economy to justify further moves up in hard commodity prices. In terms of oil, which of course is a principal trading commodity, I do worry that despite the fact that Russia and Saudi believe they will get agreement at the 25th May meeting of OPEC, America has demonstrated that it will continue to pump, and every time the oil price goes up, the shale output goes up as well. And that, to me, puts a lid on the oil price, and therefore I worry substantially about the prospects for oil-connected equities.
All right, just finally, we've got about 3 weeks to go before the general election. No sign of a manifesto from the Tories. Perhaps they don't need to come up with one because they're so confident they're going to win. But what are we wishing for there? What's a good scenario? What's a bad one?
Well, from Mrs May, we already had her 11-pointer on workers' rights. And I think this is hugely important, because what it will mean is that companies that make sensible profits by paying people adequately will continue to be well favoured by the stock market. Companies that made profits by 0-hours contracts and misbehaving suddenly discover they're in real problems. And I think that being part of the 21st century, part of being globally competitive, that's got to be sorted. Apart from that, I hope that Mrs. May will say more about building long-term competitive opportunity for entrepreneurs in the UK. That is an area that we have neglected sorely in decades past. We need to remedy that shortcoming.
Is that because we left that to the banks?
No, it's a much more complicated challenge than that. I would say that if you go back to the period when Thatcher took over, the end of the 1970s, she inherited an economy that had an overdependency on the unions. She needed to have outsourcing. She went down that agenda. We ended up with an economy that was very dependent on financial services, leverage and property development. Productivity as a result is a huge issue.
Well, we'll have to see what happens on June the 8th, but in the meantime, James Bevan from CCLA, thank you very much for joining us here on Shared Views.